All right, ladies and gentlemen, I hope you had a wonderful weekend. We got a wild week ahead with NVDA earnings and more post-election moves, but do not be fooled. Even though we gave up all of the election gains last week, I am here to tell you the rally is set to continue. So I got a couple of things we're going to go over. I have the plays, the keys, all of that stuff, but might as well start with a couple of pretty pictures. Number one, despite even giving up those gains last week, I know people are like, oh my gosh, everything's crashing now. You still had, once again, a record amount of inflows into the U.S. stock market, specifically the large cap. So we're going to talk about this today. I'm going to go over a couple of different ideas that are going around right now, and essentially the dollar trade, the strong U.S. exceptionalism, that is all part of it. So whatever you saw last week and you're like, I don't know, man, maybe the election, well, we are still riding one of the major themes. So we're going to go over that. And then the other thing, this one is just to show you how quickly people's ideas on both the economy have changed, even bonds, but above all else, like, dude, we are riding animal spirits. And when you hear people say that, that just means that sentiment and people's expectations are high. People are feeling good, and feelings are driving a lot of what you are seeing. This is showing you a fund manager survey, and it's the same exact question, them in October, the fund managers in November, and now how they feel after the election. You could see in almost all categories, people were feeling negative or bearish, and now after the election, all of the fund managers are like, nah, this is bullish. So we have a lot to go over. I'm going to cover all of that. I got a couple of cool things to show you. What do I need from you? A thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, off the bat, as far as what we have to deal with this week, it's really not that crazy. It's not like you're going to be getting a lot of economic data. It'll be home data, real estate, building starts, and then the PMIs and consumer sentiment on Friday. And then we are going to be getting NVIDIA earnings on Wednesday, and that is going to be the big driver. Why? Because that is your final or your last real AI catalyst until we get into next year. So all eyes are going to be on that. You may hear from a couple of Fed speakers. Even last week, we got to hear from Powell, and that caused a little bit of action. But for the most part, I don't think we will be responding to too much data. It'll be more driven by these post-election moves, the dollar, and then whatever happens with NVIDIA. So with that being said, this is why I'm saying this whole election rally, even though last week it seemed like every single day went down and that a lot of those plays died down. Did people take profits? Yes, they did. Even I was one of them, but when it's all said and done, the major themes of running out until inauguration or like mid-December, those are all still in play. If anything, if you keep watching these trades play out, this is going to give you your final opportunity until the end of the year to be able to buy value. This is what a lot of people are talking about. We'll even go over some ideas, but when it's all said and done, we don't really have much going on, and now we just got to work out all of these feelings from post-election, and that is having big effects on the dollar and a lot of other industries. So we're going to see where that plays out, but definitely keep in mind mid-December inauguration. This is just going to be for a period of time where you let these post-election trades play out, and then before you know it, we will be having a whole new narrative in policy and a lot of other real things to respond to. So watch out for that. That is key number one. Then key number two, to understand why I'm saying, yo, this election rally, you got to be watching it. It's not over, even though last week may have seemed some way. I showed you all those charts last week of how long it took on the last rally and the ups and downs, but when it's all said and done, go look around the world. We were talking about this ahead of Donald Trump winning, and after he won, you are watching a lot of other global currency moves, and people are getting prepared. Believe it or not, this is what bankers, and there's a lot of things that bankers in Wall Street are saying right now, but even as far as like tariffs, companies are already starting to front run it. Believe it or not, analysts are expecting that the next 2 quarters of GDP will be extremely high, not only because people's optimism is high, because if people are expecting these wild tariffs, these big companies, they're going to front run it. And everybody is going to get ahead of it and start preparing for it, just like you have watched other countries, even down to China. People are expecting more stimulus ahead of the inauguration because this is everybody front running, getting ready for the Trump presidency. So what this is creating is a very strong dollar, and what people are starting to talk about is that the U.S. is the only game in town. At least if you go look at how the dollar is wrecking everything, go look at the optimism from bankers, pretty much until we get any big changes, the dollar is going to keep running. Tech and U.S. AI should dominate even the small caps. And sadly, we're going to talk about TLT here when we get a little bit to the plays, but bonds should keep dying. I mean, it's a sad reality, but if we don't have any major changes coming in the next month or so, again, this is that time frame till the inauguration. If that's the case, I mean, yeah, you could meander around these levels, but a lot of these broader trades should just keep developing out because there is nothing in their way to stop it, to stop people from front running all these places that we're cutting from easing and now being worried about all of the rhetoric that they should be worried about if he is going to be putting in those policies. So it's a pretty wild dynamic, but this is why I'm telling you, I think there is going to be an opportunity for value. You're going to hear me bring that up again, but this is why I think we're going to be watching these trades develop out over the next 2 to 3 weeks until we start honing in on the inauguration and then start getting some real policy. So that is key number 2. And the final thing, man, to get you guys ready. I mean, I want you to understand my mindset, and I hope you could be in the right mindset. There's one window between now and December, beginning and then middle of December. Then from middle of December to inauguration, I would watch out for trades to turn. But fact of the matter is, we don't have any real catalysts coming out till December. Yeah, you'll get some other data here before November ends, but the final data ahead of Powell in December, those are going to be the big drivers. You're going to get Bank of Japan, and then we're going to be closer to the inauguration. From there, I would be more sensitive of, okay, the rally's about to end or not. But what we saw last week, I think this is all working into the craziness of change in expectations in this mania. So we'll keep riding it out from there. But the way I'm looking at it, man, my trading plan in the short term, that is going to be staying the same. Again, that's why I'm documenting this whole rally. The long-term plan is going to stay the same. And like I'm saying here right now, in this next month and a half, if the dollar keeps wrecking everything, yeah, it will continue to hurt value. But people aren't expecting this to happen for 4 or 5 years, man. The outlook is very simple. If we get a little bit of this, this is what Michael Hartnett of Bank of America says. He says, buy exuberance, sell exuberance and buy humiliation. So he's saying right now you're getting the exceptionalism, America, all of that stuff starts to run up, but the names that are kind of not running and underperforming and getting murdered, they're probably going to have their turnaround once people start taking profits from this full-blown Trump trade. So we'll see how it all plays out, but I hope that keeps you guys locked and loaded, short-term, long-term, all of it. There is going to be opportunities, and it's not like we're going off of anything except flows and people feeling a certain way, but once we run into the events, then we could get prepared for a shift. So, Chad, I hope you're ready. I hope you're locked and loaded, but now let us get into the plays. So, right off the bat, I got the first one. I actually got 2 pretty pictures to show you with this one, but materials. So, again, I mean, inflation expectations and this worry, and if we do watch a lot of these trades heat up, materials is going to be big, whether we're talking not only just oil names, but literally minerals and certain commodity companies that provide materials. They have been getting a lot of action underneath the surface. I was showing you guys the inflows chart not too long ago. I think it was a couple weeks ago. It was the biggest inflows in a few years. Well, now that is turned to ever. So again, money is coming into big caps, and now even the most amount of 4-week inflows that we have seen in materials on record. So that's one good part. And like I'm saying, you could even tie in materials to just the whole, again, materials, inflation, oil. You should be very familiar with this trade. And I think this chart kind of highlights it. The dotted line is showing you the average amount of events that affect commodities, specifically oil. And you can see the last few years, you've had more events than normal, geopolitics, all of that getting in the way. So it's kind of been coming down here. But like I'm saying, if people are getting worried this next 4 years, I mean, it's kind of weird because it's underneath the surface, but materials are getting a lot of attention. So don't forget about that, especially if something ever pops off and they lose control of the deficit. I would definitely watch out for that. But that is play number one. Then play number two, I hope this one's easy. NVDA, I mean, I don't think it's going to be easy to trade, but it is the one that is going to be the star of the show this week. They have the earnings. They kind of moved ahead of it. It's actually a chart that makes me a little bit more hesitant because, yeah, they had a run up leading into it, but the last few days they haven't done much, and now they had this little breakdown. So if the earnings are on Wednesday, it's either going to sell off for 2 days and then have a report, or it'll kind of stay pinned here and then the premiums don't move. But why I'm worried, because if you kind of had this run up, it leaves room for a sell-off. If you start positioning for pre-earnings plays tomorrow and then it makes a big move after not moving for the last 5 to 7 days, you may just be totally offsides by the time the report comes in. But if it does stay stable, then I think the premiums will hold up, and then that should be a good pre-earnings play. But all eyes are going to be on that, and don't forget the post-earnings. That'll be key. But this is truly the final AI catalyst till the end of the year that will either add to the tailwinds or kind of turn into a headwind. We will find out, but watch out for that. That is play number two. And then finally, play number three, my friends, AFRM. So I still haven't got this play. I brought it up a lot last week. I even saw it on Friday. It was cheap, and it went red to green. There was $20 plays with a little bit of time, but I said I'm going to hold off on it, but I like it. I'm keeping the logic of Black Friday. Again, last year, we saw some pretty wild trends. You saw how quickly even fund manager optimism shifted, I think, following the election. Even I don't know, I think it's going to be pretty active in holidays, whether it's through optimism, natural demand, or front running of any tariffs. But AFRM and buy now, pay later, that was the story last time. It gave it a little bit of a rally. So I don't have any position on it, but keep it in mind if it ever does become cheap. At this point, I think I missed opportunity on Friday, but if it does come back, I'm going to go take that again. So we'll see, but watch out for that. That is play number three. And then finally, I got two. I got plays that I made, but I thought I'd add TLT in there because we did make those bigger plays last week, but I have bad news. So let me start with the good news. CCJ, we had a crazy news flip. We got the news early on stream. Shout out youtube.com/the stock market. And you guys can follow my Twitter too, Real Colt News. I don't know if that gets me banned for saying that, but I used to. But CCJ, we had news that Russia was banning uranium exports, and it made a lot of these companies go crazy. We just got it early. I grabbed the November 22nd, 61 calls. I grabbed two of them at 18 cents. They went up to 48, a little higher, and I made it free, and now I got one free, and that's what I've been saying here, man. Had a lot of good trades this year, so making it free is just keeping you in the game if you don't want to take a little risk to start. That's why I'm keeping all these plays small, but once they move in my favor, man, I just make them free, and if you want to take the profits, you can, or you just let it ride out, and then it either expires or not. But got another one. We've been doing that a lot lately, but that was the only play I made on Friday. And then now TLT, here's the bad news. I made a play on it last week. I like it, and I still like everything I've been saying, but just the sad reality, even though, and again, I'm telling you this, I want you to see, look how the market looks. I know bonds didn't really do much last week. If anything, they got killed, but look at this reaction here. But I'm telling you this ahead of time. I really think, though, as these trades play out, it's more likely than not that if there's nothing that gets in the way, why wouldn't they sell off the bonds to 5? So I think it's almost like a certainty at this point, meaning that TLT still has $2 more or $250 to go down. So what I'm saying here, make the rips free. I'm going to be looking to sell the rips and make them free. Again, we double dipped on the ARC, so if things do continue, we'll be good. But all I'm saying is don't fall in love. Keep a little bit on the side. I do still like a lot of upside on the bonds. I think they are totally mispriced. However, like I'm saying, to not fight the market, man, if these trades keep playing out, if the dollar goes crazy, if they start stimulating overseas and we watch all these trades reignite, it's going to be hard for the bonds to get a bid until people's inflation expectations are going to change, and that could take another month. That could take another month and a half. So I'm not saying that the bonds cannot reprice quickly. I actually think that's why you should have a little bit on the side. But like I'm saying here, if we keep moving at this same pace, takes a few weeks here and everything is still strong and solid, we're probably going to hit 5% on the 10-year, and I think the 2-year is going to go to 4 or 5, and that will be, again, one of our signals to slow down. But I don't know if it's a matter of like, oh, if it's going to happen. I think it is. I just think it's a matter of when, and then we'll see where sentiment and all that it is. Again, you saw it already played out at 4 or 5, so we'll see how it all plays out, but that's all I have. Still going to ride those plays, though, and like I said, probably make them free once they start moving in our favor. But besides that, I think it's going to be an exciting week. Very good to be back. I hope you are all rested and ready to go. There will be a couple more earnings, but again, it'll be all about NVDA and the gang, and then we'll see where the bonds, dollar, gold, and all of that leads us. So, Chad, I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure Hydra Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, man, even the financial people, they say in hubris and humility, just don't forget, always be humble, always prepare, and you got to think ahead for next year, and I hope you do it with a humble way and be ready to go and the long term and position yourself in a win-win at all times, baby. But drink that water, stay hydrated, healthy, all that good stuff. I'll see you in the morning and on.